Laurie Ellison from Hudson Valley Bookkeeping, and we specialize in commercial real estate bookkeeping. In this session, I'm going to teach you about CAM reconciliations. All right, let's get started.
Hi, everyone. All right, we're going to talk about CAM today. And what is CAM and how do you reconcile for it? And what are different ways that different landlords handle this? I'm going to refer to first this, and I'll put this link in here. I think it's well done from this Fool.com investing, but I narrowed it way down. Okay, so CAM is called Common Area Maintenance. So you'll hear that a lot, and you'll also hear the terms triple net lease, and that is where you're paying, where your tenant is paying for a lot of the expenses for the commercial building, office buildings, warehouses, things like that. Okay, so, and I will put this in a link, or you could just, I'll put the link and I'll put this doc. So what it normally is really repairs and maintenance and things that have to do with quote unquote common areas. So if it's specific to a specific tenant, you cannot put it in your CAM bill, right? So parking lot maintenance, landscaping, snow removal, hallways, bathrooms, elevators, utilities. Okay, and here's some certain things: property taxes, property insurance, property management fees, building repairs. So the property taxes I have seen is very specific to the lease, and that you will, I mean, these leases are so highly negotiated that everyone is separate, like very different. So really important to keep really good notes. One of my favorite clients calls it a lease digest, and that's where he summarizes most of everything that has to do with the lease into like one page or smaller, because one person could have, you know, a bigger just responsibility to pay things where someone else might have a cap. I think it says that somewhere in here. Okay, here it says in a triple net lease, the tenant pays CAM charges and takes on almost all responsibilities. They pay their pro rata share. It's really important in go by your leases that you have in like an Excel spreadsheet or a Google sheet that like shows exactly, and you always know, you know, how you add up to 100%, and probably not 100%, since some of the building could be that common area maintenance, right? Or common areas like a lobby, bathrooms, and utility rooms, and server rooms, things like that. So just keep that in mind. You might not get to 100. Okay. So anyway, like one thing, you know, you're thinking about is you're renting on a like $1 per foot basis. And then the tenant is also going to pay CAM in addition to that. So, and then the difference is a gross lease. And that's where you're including, or you're trying to figure out, you know, what all of those expenses, and if you pass that on to the tenant, what would that be? Now, like right now, it's 2023, July, and I'm talking to a lot of people with office space and they just can't unload it. So they might be trying to do something of a gross rent. I was up in Boston recently and I drove by some office parks, and I've never seen this before, and I'm seeing signs for short-term leases, right? So never heard of a short-term lease in office space, but it's that soft a market right now. Okay, I'm sure you know, possibly. All right, so this is a good thing for you to think about, is that you would, and I'm going to put this as for a download, not with these numbers, but one that's totally blanked out, that you would keep track of all your tenants, their lease period, what is their base year, that's the year they moved in. The base year amount I'm showing on these spreadsheets is like what was CAM, like the total expenses for the building as of that year when they leased. So look, this tenant right here, the expenses for the building were $108,000. Then they went way up by 2018. Okay. And then what we do is we calculate the excess over base year. So how much did they go up since the tenants moved in? And then what we have here is the proportionate share. So for whatever reason, this one goes more than, because it's probably rounded is part of the problem, right? And then this determines if you were doing this, then like how much do they need to pay ahead? Now, a couple things. I would say that, a lot of buildings, we don't then, like this was a huge bill for this one tenant, right? Because we need to really add on to that CAM and keep it going so no one gets bills like this. So, this is a good way to do it, but another way, I can talk about some other ways. But this is a really good spreadsheet to really keep track of like where you're doing, what you're doing, and what your current year amount is, because that's what really matters, right? How much does your building expenses, what are they? And then what's their proportionate share? And then their rent due. Now, a lot of people pay an estimated CAM. So if you're the landlord and going into, if you're watching or your bill expenses are 175,000, right? And that, let's just say, let's say it's 25%, which would make, I'm just saying one tenant is quarter of the building. That's what they're going to end up paying for the year. You should be billing them currently this amount plus their base rent, right? So let's say they're paying 5,000. Now you can say, listen, because in this case, the CAM hadn't been done and there was some issues with the market being very soft and tenants having issues, right? So sometimes I see that landlords are even afraid to bill for CAM because maybe the economy is really bad. We had the pandemic. They can't barely even make the rent as it is. How are you going to do the CAM? But what I would say, after working with so many real estate investors and different things like co-ops and HOAs and so forth, is you have to keep passing this expense along and like doing it in small amounts, right? So that if this is their CAM and they're used to paying that every month, and then it's only $100 more, $200, once you realize your thing, you should do that. Okay. But back to just figuring out CAM. So what I would recommend, let me just kind of make a new sheet and I'll say what I would recommend. Is it normally when you sign a lease on your base year, right? So the tenant signs a lease. So you've got your base rent. Let's say it's $5,000. Okay. And then we have the estimated CAM, right? So what did I say on this one? Let's just do something simple. 3645.83. That's a lot of rent. I mean, around here, rents are so expensive, right? So their total payment, what is then 8,645.83. And that's based on a certain year. So they should be good for that first year or up until a certain point, and the lease terms could have that, right? And then what normally happens is there's a reconciliation at the end of the year. So in that case where the spreadsheet, they hadn't been charging enough CAM and they were still sticking around the base and then just hitting everybody with large amounts once a year. Luckily, these were big tenants and there were medical practices and stuff, and they didn't even bat an eye and they paid it. But I wouldn't recommend that, right? Okay, so you've got your base rent and you have your CAM. So they're going to pay this every month. Then what happens is you do what's called a CAM reconciliation. That is when you add up and tally up all the expenses for the year, and then you would fill out one of these sheets. So let me just do a blank one here, right? So I don't even want to totally fill it out. I'm just going to show you. So you have your base year, your current year, and this would be excess over base, like as the years go by, so that they can see. We usually will give these with the invoice so they can see, right? So what could happen though is sometimes it could go down, maybe, right? And so what you're doing is truing it up. You're determining, okay, we said that we think what was that? What did we say? It was 170,000, 75,000 for the building. And it was a quarter of this. So your monthly payment was 36.45.83. So then when you do the reconciliation, let's say, because nothing is usually less, that it's 180,000, right? So it's really 45,000. Okay. And let's say it's a perfect year and everybody paid everything. So then you would just say, okay, we did our reconciliation. You paid us 43,750 in your monthly CAM payment. Take the 45,000, take away what you paid. You have a one-time bill of 1,250 to catch up. Then what you need to do is come up with their new payment. Right? So you're going to say, going forward, we're going to do 3750. If you do it this way, based on like the last year, no one's going to have a problem. I think. Don't hold me to it. But they're going to say, okay, that's fine. They're not, depending on what you can get from your tenants, this way, you've got the 180,000 and now you're going to have them pay the correct amount, right? So now their CAM payment is again going a certain amount. I hope I'm making sense. It's hard not to jump around. So the key for me is when you have these triple net leases and you want clients or your tenants to pay and keep up, you do not want to get behind on this. Like if you find that things are getting, you can do it in mid-year and say, we realize that we have a huge property tax increase and so forth. I have seen letters from my clients that are not in real estate where they get CAM adjustment letters or like basically a rent increase letter because the building manager has determined that certain prices have gone up, like the pandemic, right? And then they'll like adjust it earlier, because the worst thing to do is hit people and blindside them in January with huge bills. So I think that is one thing to take from it. Okay. The other thing, in this case, we were tracking the real estate tax separate from the regular CAM. And that's because in certain leases, maybe this one it was, but we had two different line items, right? Like one line item for the CAM, the percentage of the operating of the building, and then a percentage for the real estate piece. And this piece would show like what was their base year for real estate taxes, how much have they gone up, and then what is their excess, right? And these were filled in through these tabs. And I made this one up from something. Okay. And this is just a nice template to show people what you have done. Now, another thing you could do, even if you didn't want to do this, is you could say current year amount and then amount paid, right? Like if it was different and they actually were paying the higher ones every time. So from my little Word doc here, I said that their estimated CAM was 3645.83. Okay. Times 12. And what did I say? Their total due was, this is just another way of thinking it, 45,000. Right? Where did it go? Okay. Then proportionate share wouldn't mean anything. Current amount. You could do it something like that, right? Just change these things. So this is what it was. This is what you were billed. I'll change that here. They could still have proportionate share. You could play with this a little bit, but then this is like, I think a better way if you're keeping up, right? This one was one where they were literally paying the difference every year at year end. And I would really recommend coming up with it ahead of time. Okay. So that's one thing. So at year end, you do the CAM reconciliation. You should do it right away, like first couple weeks in January, and get that money in and get a new CAM number out to the tenants by February. That's my opinion. We're going to talk about what should be on that. So what are you going to do? You're going to do your CAM reconciliation first weeks in January, send new CAM amounts by February 1st. Because everything's about cash flow and not hitting people with big bills, right? I've seen CAM done a couple other ways, which I would like to go over. I had a tenant who has since also sold his building. It was a warehouse, right? And in this scenario, what he had me do was every time like the monthly landscape bill came in, he would pay it, right? And then he would immediately have me invoice the tenant. So it was like a small warehouse, maybe 4 tenants. So every time, like, we would pay the bills, and then he literally did no CAM reconciliations. He just he billed the tenants as the expense happened. He's the only one I've seen do that, but he had literally almost like no cash flow issues because there was just no question. And I sent a copy of each bill with the bill to the tenant. And then like if I got the insurance or the property tax bill, I would immediately invoice the tenant, and I think I would get the money in right around the time that I needed to make the payment. So we were really fast with that. And we also didn't need to have an audit because they had all the backup from everything they were billed for. And there was really no question about the integrity of the triple net lease because they literally got a copy of every bill. So if there was, and I don't ever remember anyone questioning a single bill. So it's a thought on one way to do it, because the tenant doesn't feel like they're being taken for granted. Because what can happen is landlords can mismanage, and the tenant is the one that has to pay the price, right? Because they're paying their proportionate share. Another thing I would say is be prepared for an audit. And I don't mean by the IRS, I mean by the tenant. So another client, an office building, leased space to a nationally known real estate brokerage, right? And this is like in the early 2000s. And I actually was on site. I went on site for the audit, and it was one where they paid an estimated amount every month. And then in this case, my client did the CAM reconciliation and came up with the bills and sent them out, right? And then they said they were coming for an audit. And I think, you know, he had taken the operating expenses straight from QuickBooks. So I didn't think it would be that big a deal, but literally what they did was they actually asked for every single bill that we had included in that CAM calculation. And luckily it was very, totally on the up and up. There was no problem. But I always think of an audit is where pick 10 things and see if they can come up with it. In this case, it was literally prove every single expense and the backup. So be really careful if you have CAM that you are literally keeping everything very, you have to be very organized, because if you are leasing to nationally, held corporations, they may audit that and you're going to have to justify everything. That's another thing to think about. Okay. All right. I keep rambling. Now, let me just show you what I just put in a year here and played with these. Okay. What could be included in your common area maintenance? Okay. And we're keeping real estate tax separate. I would always keep that separate just in case some of your tenants have that included and some don't. And the article was saying also there could be a cap on certain expenses they're willing to pay. So like you might have to, if cleaning goes over 20,000, like you might have to make a line item here and adjust for those specific things, right? That like maybe some tenants have a cap at. So you might have to make an adjusted operating statement that would like reduce things for certain tenants. Like if they will pay a max at 15,000, right? Then this has to be changed. So everything's really dependent on that lease, because then like, let's say that's the only thing with a cap. That tenant is going to pay less because they were smart and they got it capped. I was trying to make that a grid. Okay. Right? So then this would be like the calculation would be for that specific tenant could be based on this number, not the 175. So I'm trying to get at. So you would have to maybe make something, if you have certain things that are capping out, then you're going to need to figure that out as well. But basically for the CAM management fees, and I mean, I can't give advice, like I don't give legal advice and I don't give tax advice, but even if you're a self-managing landlord, you should be paying yourself a management fee. You know, you should be figuring that into the building. And if your building can't survive without management fees, it's hard to sell, right? And it's hard to finance because any financing, I mean, I started out working in commercial loans for properties, you know, commercial buildings. And like they always, the loan company is going to assume a management fee. So you will need to have that built in, or they're going to assume it for the new buyer. Because at certain points, someone might not be able to self-manage. And so that has to be factored in. So I'm just going to say it. You should always be paying yourself a management fee and making sure your building pulls in enough rent to do that. And if it doesn't, then you need to rethink your rents when they come up to renewal. Okay. So different things here, payroll, maintenance, cleaning, building supplies, electricity, water, gas. The electricity and the gas should be for only the common areas, right? Like the lobby, halls, and so forth, right? Insurance, usually a big one. Sometimes legal, accounting. You could have the security, like if you have a security guard or someone who works like the desk in an office building, things like that. And then you would have your real estate taxes as a separate. I think they should be 2 line items. That's my thing. So whether you're using Appfolio or Yardi, those would be, they can help you do your CAM outside. This is really for more of someone who is probably using QuickBooks or some other thing. And then also, you know, there's a lot of things in your P&L, no matter what you're using, that you want to, like, to me, put it in something that this you can give to the tenant, right? And they don't need to see other things that don't have to do with CAM. So you don't want to print them off a QuickBooks report or even something from Appfolio, Yardi, whatever it could be, right? So you would still want to use something like this with your own codes, but really be understanding that you could be audited by the tenant. They could hire their CPA or someone and say, I want you to prove it out. Show me how you spent $11,660.72, right? And if you can't prove it, then you have an issue. So make sure that it's really truly for the common areas. The other thing I hear from people a lot is what you cannot include, and that is the capital improvements. You cannot include anything that's a capital improvement. So that is like, and you know what they are, and you all want to expense them, but you can't. Okay. You can't include like the price of a new roof, new parking lot, new sidewalks, new furnace, right? Are you getting what I'm saying here? All of these things go into your basis. So you don't want to be expensing things that should be going into your basis. Now, I know you already know this, but you buy a building for $1 million and you put 250,000 in capital improvements. Now your building is, your basis is 1,250, right? Keep that in mind. Then your accountant will come up with you with your depreciation, and they're drastically changing these laws. So, you know, you've got to really work closely with the accountant to make sure that your depreciation is following the new codes. But remember, these things, new roof, new parking lot, new sidewalks, new furnace, new AC, lots of them if it's a big building, those are all capital improvements. You cannot include these in your CAM. Okay? CAM amounts. I think the other thing, just to really drive home, is to stay on top of where you are with your operating expenses for the building, you know, on a quarterly basis. Are you tracking well? Did you have a massive property tax increase? You know, are you fighting that property tax increase? That is the biggest thing you want to think about all the time, is that one, always be prepared for someone to audit that number. So just make sure you literally can prove out what is in any of the amounts that you're supplying to the tenant. So what I like to do, I mean, I really think that they should see what's going on for the building for that year, right? And that this would go with the invoice of how much they need to throw in. What I also think is good for you to have this as like a CAM workbook is that you're watching your expenses over the years for CAM, because when you look at those P&Ls, and there's so much other stuff you've got in there. You've got your auto expense and your whatever and all this other stuff that they don't pay on that, right? Like you could be having certain expenses in here that are not going to be put into this. So I like to, I think this is a good thing to keep going, you know, year after year, because one, it should tie out to what you hand them each year and then with their bill, but also you can watch if something is going wrong. Like if somehow something goes way up, maybe you've miscoded, right? You have something in maintenance or repairs and suddenly it's $20,000 more than it normally is. It's probably a capital improvement and you need to get that out of there. You know, and also if you look at it like this, you will be able to spot if you have a bookkeeper doing this for you and he or she has miscoded things, and now you're watching this year over year, you can start to notice if you have an issue. So I highly recommend doing this. I recommend, you know, getting those CAM, those true ups done by really, I mean, mid-January is key on this. Like if you're doing your books, get it done. If you're using an outside bookkeeping company or bookkeeper, make sure this is like the most important thing they do. And to do this, you make sure they also have reconciled everything. Don't prepare these if your books aren't reconciled. So your books need to be reconciled, and then you should go over, if you're using someone outside, what are in each one of these codes, and just say, pop the codes, right? So you could see what makes this up. And what you want to look for is if someone has put in something that really shouldn't be included. Like if you have to bill tenants for certain electricity, make sure that that is not included in this workbook, because that electricity is separate from the CAM electricity, right? Everything you're looking at, just be like, was this for, you know, running of this building? Okay. And then you might have to like actually do separate calculations determining on if they have caps, right? So we had that, I think on this one where I said this tenant had a cap, right? So I said they had a cap on one. And so you might have different tenants with different caps. I mean, it can get so complicated. This is really like the simplest form of understanding it. But if you think about it this way and you get your number of how much did it cost you to run that building and what can you run through and put through CAM, you've got to come up with your number and then you multiply it by the proportionate share for that tenant. Then take away what they paid in estimated CAM charges, right? Then you have your true up number for that January bill, and then do a new estimated CAM charge starting February. Then you should be in good shape and you won't have that issue of sending a huge CAM bill that they may not be able to pay. And then the other thought is to do it as that other client of mine, he billed as they came through. I thought it was like a lot of bookkeeping in a way, but honestly, he didn't have to do a CAM reconciliation at the end. So maybe he was smarter than the rest of us. Then also in certain management things like Appfolio, Yardi, they do have CAM in there, but that's just, another thing. It depends. A lot of the people I work with, they're self-managing and there's usually only so many units and they don't want to pay the expense of some of that software. And they figure, well, I can just do it in an Excel spreadsheet. I know real estate investors love their Excel spreadsheets. So a lot of you do it that way. So if you're new to this, or if you've been paying a CPA or someone to do it and you feel like I still don't know why, right? Now you can understand it. It really is the operating expenses for your building that are common area. Okay. And anything that you cannot justify that was in the common area, you should not include in your number. If that makes any sense. All right. I hope you enjoyed this video and please send me any requests. And if you're interested in real estate bookkeeping, we will have a link and a phone number you can call. All right. Have a great day.